Welcome to the Craig Brock Real Estate Show, helping you navigate through all the challenges and pitfalls related to real estate. Craig is San Diego's real estate investment strategist. And now, here's Craig Brock.
And good morning, Southern California. Congratulations to everyone that took advantage of the low of mortgage rates for 2014. We're slightly off the low this morning. A little bit of money is leaving the bond market and the MBS market. But there's some breaking news that's out by the San Diego Association of Realtors. No change is the message this morning. No change in April median housing prices in the county from March. San Diego's median price for single-family house in April stayed unchanged from March at $491,000. But this is up 9% from April 2013, according to the San Diego Association of Realtors. Today is day 2 when it comes to talking about seller-financed homes. We're going to get into this here in just a moment. Yesterday, we talked about seller financing and how it can benefit you. If you're traveling on Route 56 in the Qualcomm, you might not be thinking that seller financing is for you. But this is something that you want to consider, because why on earth would you take all of your money out of equities and put it into real estate if you don't need to do that? This is an opportunity to hold on to your cash. There's other breaking news this morning concerning Bank of the Internet. BofI Holdings reports their net income is up 40.5% for the third quarter. The scenario there is that Bank of the Internet, located in Carmel Valley, is known for its alternative lending. This shows you that alternative lending is on the rise. Bank of the Internet offers an asset depletion program. They actually offer a pledged asset program for high net worth individuals for business owners. And if you're a business owner trying to get a loan, boy, what do you have to know? Maybe you've already tried to get a loan and you've only been turned down because of your Schedule C. If you've had significant deductions on that Schedule C for Section 179 expenses, that's at accelerated depreciation, maybe because you bought medical equipment or vehicles, or you've bought fixtures for your business, that money can be added back into your income. But if you simply spent the money, if you burned off the money on traveling, maybe you've written off your life, you probably found out that you can't qualify for a mortgage through at least a traditional bank. But there is a solution, and it's seller financing, and that's why we have experts with us again this morning, Terry Lewis and Mark Stein. The website is Seller Finance Consultants, and with the price of FHA financing going up, this really looks attractive. Good morning, gentlemen. Thanks for joining us on Financial News and Talk.
Good morning, Craig.
It is a good morning. Certainly, prices are unchanged for homes in San Diego. So if you're looking to buy a home, this is encouraging, because it seemed like we were in another bubble. We were talking off air about comparing your strategy to FHA financing, which is the government form of financing. It's been around for 70 years. It offers the opportunity for home buyers to get into a home for only 3.5% down. But there's costly mortgage insurance. And just the other day, I spoke to a gentleman that he had a recent short sale, and he said, there's no way in heck I'm going to go for FHA financing, because I'm going to be forced with having to pay the upfront 1.75% mortgage insurance premium, and then I have to carry monthly mortgage insurance, which equates to an annual rate of nearly 1.5%. So FHA financing is getting expensive, even though it looks attractive, because those rates are down to 3.75. But when you have to carry this mortgage insurance for 30 years, you might want to think twice about this strategy.
Yeah, Craig, the government is using the mortgage insurance as kind of a piggy bank for they're siphoning off those fees, and and I think FHA has been the most profitable now in the last 90 days or 6 months. And the mortgage insurance doesn't come off when the loan amount reaches 80% of the outstanding balance. So, there's that going on with the government kind of taking advantage of a situation here. And then we can do seller financing, and the difference between, let's say, a really an effective rate on FHA of maybe around 6% and a 6 to 8% seller carryback, the payment really is not that different. And then you've got your closing costs on top of that for FHA. It's, you may have a minimum of 3.5% down, but with your costs and points and fees and upfront mortgage insurance premium, you're approaching 10%. And so why not do a conventional loan or use all your down payment with seller financing? And we just think that it's getting too expensive.
Well, isn't the real key here also the fact that you're looking at a small organization that's going to approve you versus a bank that has to be willing to take a chance on you? Because let's face it, what does a bank do when you apply for an FHA loan? It comes down to having a qualified underwriter that's willing to accept you, that's willing to take a chance on your situation, that the FHA is going to actually insure your loan, that they have an insurable note after they fund your loan. That's the critical element here. And let's face it, if you've had a previous short sale or foreclosure or bankruptcy, maybe you're not so sellable. But the FHA does have clear defined guidelines for this, but a lot of people have had these hiccups, because the last 5 years haven't been especially kind to all businesses. There have been cutbacks, and we're seeing some cutbacks with Twitter stock price off 50% in 2014. I'm still trying to find out what in the world to do with Twitter myself. But let's face it, it's been a tough economy out there. People need solutions. FHA might not be the best solution. Listeners that have been accustomed to hearing me for a while know that I stood up years ago. I was written up in the San Francisco Chronicle with Bloomberg is looking out for the little guy. When FHA wanted to make some critical changes, they wanted to deny financing to people that had medical collections. That's just not right. I was quoted in the San Francisco Chronicle as saying that if you've taken an ambulance ride and you haven't paid the bill, that might prevent you from getting into a home. That's unfair. Now, I want to know more about these strategies. We're listening to Terry Lewis and Mark Stein with Seller Finance Consultants. You can check them out on the web. It's easy to find, sellerfinanceconsultants.com. We'll give the phone out later in this broadcast. But FHA financing is more expensive. The mortgage insurance lasts for the entire life of the loan. And if you earn over $100,000 as a family, as a household, you can't deduct the cost of mortgage insurance. That's one of the key elements here. That's why this seller financing looks so attractive. Gentlemen, I want to know how this can help me here in Southern California. Are there deals that can be found, or is this something that's available in out of the state, out of mind?
Well, you really need to work with a professional. We have this joke that we say that seller carrybacks are not takeout at the local Mexican, Italian, Chinese, whatever you want to call it, restaurant. And the reality of it is you have to be working with someone that understands and actually embraces this as a meaningful
We lost Mark. So
well, Terry, I want you to explain the scenario here.
Yeah, you have to work with someone. There's some new laws. Dodd-Frank Act regulates seller financing now, and in most cases, you need a mortgage loan originator to underwrite and process these loans. So you have to have a licensed person, first of all, to do seller financing. But also, as far as those types of homes being available here in San Diego County, there's a search that realtors can do, and there's over 300 homes available right now where the seller is actually offering to carry the loan for a buyer. Wait
a minute. 300 homes available in San Diego County? Why isn't anybody talking about this?
I have no idea. It's a search that you can do as a realtor, and it's based on terms that are being offered. And we just think that we should get the word out, and there shouldn't be any realtors that list a home without offering some kind of terms, or at least having a conversation with the seller to see if that wouldn't be something that would be in their best interest. So that's it's beyond us, but right now there's over 300 homes, and they vary from entry level all the way up into Rancho Santa Fe multi-million-dollar homes, because those homes have a real high tax rate if the seller cashes out. So in a lot of cases, they'll only carry.
Well, let's face it, these strategies are used for luxury homes as well in Del Mar, Rancho Santa Fe, Rancho Cucamonga, and some of the other surrounding hills, maybe in Laverne. This is a solution because let's face it, with Qualcomm stock near $80 a share, why on earth would you want to pull all your money out for a down payment? If you're pulling $300,000-$400,000 out to buy a luxury home, that means that money is no longer going to be working for you. In many cases, you can get into a home with a much smaller down payment, just a fraction of the down payment, and the seller financing can look really attractive. It's 7:16 here, and we're on Financial News and Talk on the Bloomberg Network with Mark Stein and Terry Lewis. They can help you with seller financing. Their website is sellerfinanceconsultants.com. That phone number I promised you is area code 619-786-5550. That phone number is 619-786-5550, or you can check out the website. This is the forgotten solution. I know we want to get into how this can help sellers, because let's face it, you mentioned earlier the Dodd-Frank Financial Reform Act, which has helped the banks. It was supposed to help the consumer. Unfortunately, it doesn't sound like it's helping the consumer at all because it's restricting credit to the consumer. What kind of a recovery is this, gentlemen? That's why you want to have alternative strategies. That's why we're seeing companies like BFI Holdings, Bank of the Internet, they've got their earnings that's up 40% this morning because they do have some alternative options. But let's face it, that's for wealthy people. We're talking about people that are working, that have their own businesses. They need these strategies, gentlemen. I want to get into how this can help you if you have a property. Let's say maybe it's underwater, you owe about what the property value is on an appraised value basis. What can you do with this concept to help someone get out of their property?
Well, that's a good question, Craig, and I'd like to start with thanking you for yesterday. We had a phenomenal response on yesterday's program, and I think this is so appropriate of a conversation that and it played itself out by the calls that we got after the program yesterday. So I want to thank you for having us and appreciate.
Well, you bet, Terry. There's nobody else in Southern California that's talking about this. I'm not sure that there's anyone else in America talking about this because let's face it, a lot of strategists out there, a lot of agents, they just want the low-hanging fruit. But I'm looking out for the little guy. I want to help people that haven't been able to take advantage of President Obama's program. And let's face it, if you earn $40,000, you're probably pretty happy under President Obama because you're not paying any taxes. If you're wealthy, if you make over $500,000 a year, you're probably pretty happy. If you're middle class and you're making 80, 90, 100 grand, you're probably not so happy. That's why you need these esoteric strategies. That's why I want to hear from you, Terry, what you can do if I have a home somewhere in the Southland, Rancho Cucamonga. I've got to relocate because of my business, or maybe I'm a doctor and I'm moving to a different hospital, but I have this property that's, say, $600,000 in value and I owe $700,000 on it, maybe $675,000. What do I do?
Well, there's a good chance that obviously you've been hanging in there and you're still current on your mortgage, and possibly you've gotten a modification from the bank, and some of the modification interest rates are very low. And so, you could potentially work with a new buyer that would take over your loan with or without permission from the bank as some type of a wraparound or even a loan assumption. And so those are strategies that can work to relieve you from the payment on the house. And those actually work really well. And the payments, if they're modified, might even be lower than the current loan rates. So that's...
Well, just a second, Terry. You said something interesting there. I'm not used to even going out the door for a sandwich without getting permission from the bank. You mentioned about doing something without asking permission from the bank. Can you elaborate a little bit on that?
Well, it's not illegal to take over a loan. There is a strategy that where a buyer can actually take over the seller's mortgage. It's called subject to, where they would it would still stay in the the mortgage would still stay in the homeowner's name, and the new buyer would be making the payments for the mortgage holder. So it's a little bit, it all needs to be disclosed, but the in essence, that seller can get out of the house and still save their credit. So
Oh,
that's
that's important. Let's face it, if you go through a short sale and you're not saving your credit, maybe it won't prevent you from buying a new GM pickup truck, but having that short sale and your credit's going to last for a while. And if you end up unable to short sale because the bank won't approve the short sale, then you've got real problems, because then you're looking at a foreclosure. And let's face it, if you're in the military, you don't want to have a foreclosure on your credit. If you have any kind of a business, you don't want to have a foreclosure on your credit, because it's going to restrict capital to your business. This is a solution. This is a valuable solution to be able to get out of that property. Or maybe you have a property that you've been renting, you've held on for too long. This is a solution to get out of having rental property. Certainly you might receive some tax benefits from it, but it's going to be a long time before you get above water in many cases with these properties. Why not unload it and be done with it? You can do that with seller financing. And I know, Terry, you've got all of the solutions available. You have a comprehensive plan, so you're not talking about just sitting down and typing up some kind of a memorandum. You actually have a complete system to help sellers.
Yeah, that's a good point. We're, in our name, it's consultants. Everybody's different. Everybody's situation's different. And we need to sit down and get the facts from people and really try to strategize on what their needs are. My main thing on real estate is it's a people business. There may be a house involved, but it's involving people's lives, the sellers' lives and the buyers' lives. And really all we're doing is meeting both of their needs and solving problems, and that's really what you have to keep in mind in real estate. And I have done that for 30 years, and it works really well.
Terry, why aren't you preaching short sales? Why don't you just short sell the property and make your commission in 30 days like everyone else? Why aren't you talking about that?
Well, short sales don't work anymore, really. I mean, I've had them take up to 2 years. I've done short sales, but it's not solving people's problems. It's just creating another one. And values have gone up, so the short sales are going away a little bit. I think if someone's very close to being upside down or a little bit upside down, or there's ways that they can get out and solve their problems without damaging credit. And short sale is like a foreclosure. It's years before you'll recover. And people that have had those in the past, seller financing also it allows them to come back into the market, because it's a strategy that the seller's accepting their credit how it is, and there's circumstances that people have that happen. But there's a huge number of people that have dented credit, and seller financing is the way to do it. It's just a phenomenal strategy, and I feel passionate that it really needs to be educated.
We're listening to Terry Lewis. He's partnered with Mark Stein. The website is sellerfinanceconsultants.com. I'll give you that phone number out shortly here on the Bloomberg Network. We're speaking about the solution that can help you. It sounds like a win-win for everyone. And Terry, I have to hand it to you. You're starting to sound more like a financial planner every day. You're starting to sound like a fiduciary, because you're talking about doing the right thing for the customer. Let's face it, this is the strategy that can help you get back into home ownership. If you have had a short sale or foreclosure or bankruptcy, it can also help you as an owner of real estate, because it will allow you to unload that property without having to go through the short sale process. And that means that you never leave the real estate market. So the case in point here is that if you sell your property with a carryback, you have the documentation, you can actually go on to purchase another property. How about that scenario? A lot of people haven't thought about that. You have the documentation. After 6 months of having that seasoned documentation, all of a sudden that property is basically gone from your debt to income service. So if you sell a property somewhere in Northern California, or maybe out in the desert, maybe it's even a second home for that matter in Palm Desert, after having that seasoning, you can come to San Diego and qualify for a new mortgage, providing that those payments are made on time. But most people that are getting into a home with seller carryback financing are making their payments. Terry, this is just fantastic news. I know you want to get out that phone number too, so listeners can call you anytime throughout the day because they have lots of questions. You have a strategy. This is a complex strategy that you don't want to do on your own or even go out and hire an attorney for because you already have all the nuts and bolts for this.
Yeah, well, an attorney actually can't do these because the CFPB, the Consumer Financial Protection Bureau, which is in charge of Dodd-Frank, the Dodd-Frank Act, requires a mortgage loan originator, like I said earlier, in most cases. And the reason behind that is the mortgage loan originator has to report quarterly to the NMLS registry, which was created by the S.A.F.E Act, another government entity. And I really think it's just Big Brother that wants to keep tabs on what interest sellers are collecting, and so they've narrowed it down to only mortgage loan originators can do these loans. So it's kind of it's convoluted and it's very complex. So we're on top of this, but at the same time, it's a strategy that just makes sense, and it's not reinventing the wheel. It's back to the 80s, and we're excited about it. And sellers, that have a home, maybe a second home, they're tired of tenants, older couple maybe that wants to go travel. It makes so much sense to sell it, carry the loan, and have an installment sale and just get money in the mail. The strategy is just unreal for even sellers that want to just have a cash flow and retire.
It sounds unreal, but it's a very viable scenario. We just have about 30 seconds here, Terry. You mentioned back to the 80s. I wonder if we're going to see that DeLorean come back. But the scenarios that this is a strategy for you. We're not talking about the fraud that's potentially perpetrated on Craigslist with many of those ads. This is a viable solution. We're all licensed here. Terry Lewis, Mark Stein, you have this great website set up, sellerfinanceconsultants.com. We'll be back tomorrow with more information on how you can take advantage by investing in these types of transactions. Terry, I want to get your contact number out there, sir.
Sure, it's 619-786-5550.
Well, thank you very much. I appreciate your contribution this morning on Financial News and Talk Bloomberg.
Thanks for having us.
Oh, absolutely. Bringing you the solutions that you need, Southern California, to help you get into a home of your own when the bank says no. This is the high-level esoteric planning that can make all the difference. If you have a house to sell, this is the strategy. Contact my office for more information. You can check me out on the web, craigbrockmortgage.com, craigbrockmortgage.com. Have a fantastic day.